Welcome back to Krown's Crypto Cave, and hey, happy Saturday morning. Hope you're having the best Saturday morning out there in good old cryptocurrency land. As we say, the best of the best, the happiest of the happiest, and as always, wishing you well. Let's get on the live stream right over here because no more time to be wasting. And yes, that's right, all my programs are on sale. Always have to remind myself to even talk about this, but just want to make sure that all the people who are interested in this have this information, as I won't be having any more sales anytime soon. And it's only going on for another couple days till the end of 2018, which is, another literally 2 days. So again, that is technical analysis program, the options program, and then the jewel indicators. Now, the technical analysis program, the options program, those programs are designed to basically go through on a day-to-day basis on what I do to actually do this as a living. So understand that these programs are designed for a more serious type person getting into essentially what the art of technical analysis is and the art of options trading is. So it's not going to be applicable to most people. This is really designed for the diehards, with the diehards in mind. Again, who want to do this as a living. For most people, you're going to get by just fine. You're getting off just fine by going through my free playlist on YouTube titled New to Technical Analysis. Start here and then graduate from that one on to technical indicators. I don't really have anything on my YouTube for options because it's just too much. It's too much. It's just too much. The options program, just to give you an idea, is 52 modules. The technical analysis program is 38 modules. Both come with their own set of unique proprietary indicators, and obviously access to the hidden Discord as well. So I'll get off that topic right now, take off that right there, and let's get into the charts, as that's what everyone came here for. So let's get right into it. And Bitcoin. Okay, Bitcoin actually did something interesting last night. It did close above the red 10 simple moving average right over here. That does change a few things for me in the lower time frames. Now, we are in a weekend. We are in weekend territory right now, so it's just notorious for being really fucking annoying and bullshit. Typically, you might get a few big moves here and there, or like relatively big moves, like a shot up, shot down, but you never typically speaking, you don't really take out like big areas. So let's go talk about what the big areas are right now. Essentially, the big areas in the way that I see it right here is, let's actually get this right. That was the gap of the CMEs right over here. We actually hit it perfectly. I had it around 4,000 yesterday, but sometimes I just say that, colloquially speaking. I think the people who've been tuning this content kind of knew exactly what that was looking like, and a lot of people taking trades off that. I actually did take my trade off that as well. I basically got rid of my my long hedge, which was bigger than my actual position. I think I did show this on stream last night, and then I got rid of the rest of it after that. So technically speaking, I did uncover my long after that. So I have a little bit of short deltas. I'll be covering once again if Bitcoin gets back into the 3850 to and anywhere below 3800. I'll be covering. Hourly will be getting a golden cross. Probably on the next tick confirmed. I think are we confirmed or not? Man, it is so damn close right there. It's hard to really say for certain. But typically speaking, you will get a test back to your 20-minute exponential. That's essentially what I'm looking for, to get back to neutral. Essentially, I don't really want to be short right here. I don't also want to be long during a weekend. But overall, your next big resistance, and the more important point of this, is the 39.60 area right over here, 39.69, because that's just a good number. And then you have support right over here, 38.40-ish area. Now, if you do lose 38.40, it's not over or anything like that for the bulls. I think right now, you do have to give the bulls a little bit of a nod in like the short-term time frames, and this is where things become extremely delicate. And I really do appreciate the people who tune into this content and understand what I'm about to say. And essentially, yes, short-term, I can be kind of neutral to maybe slightly up. Although, yes, I am looking for a move down here, but do you call that like a down? Again, it's not that far down. Medium term, I suppose you could say. I am looking for lower lows. I'm underneath our current 3100 low, and in long term, I'm quite bullish. But this always gets fucking lost in translation. So again, massive appreciation to the people who really make an effort to understand that, as trading is not a black or white thing. So it's really difficult when someone comes into the Discord and says long or short, and it's like, all right, let's have a fucking day-long conversation right now on something that maybe we could just narrow it down by having some parameters to go off of right now. But anyways, with focus on these sorts of time frames over the weekend right here, that's essentially what I'm thinking. And as long as we are essentially holding above the 10 simple moving average on the daily, I do respect that. So that is the big key point for me, closing dailies above the 10 simple moving average. As yes, you do actually have this good cross right over here, and you are back above it right over here. So that's a rejection of what this now looks like as a stop hunt to the downside. Yes, people are going to be talking about some sort of an inverted head and shoulders over here. You already see it's being screamed upon on good old crypto Twitter because they're fucking amazing. But I have a lot of things to say about that. This is not an inverted head and shoulders by any stretch of the imagination. When you have a neckline that's potentially slanted like this to the downside, that's a big fucking no-no. You want it at least like, relatively flat or maybe even slightly up is okay as well. Also, the shape of this is wrong. The right shoulder, the dildo bodies are going lower than your left shoulder. That's not a huge one, but it does matter. But like in the more traditional sense, it does matter. Volume piercers on this guy are wrong. And overall, people are playing this before it even happens. So if you are going to be a pattern trader, and we have a great example of this last night, which I'll go through in just a second, but if you are going to be a pattern trader, you need to actually wait for, you don't need to do fucking anything, right? But the best thing to be doing, or the right way to be actually trading it, is waiting for confirmation above the proverbial neckline, which we don't even have to begin with. But it would be, I guess, if you are kind of squinting your eyes and making an excuse for it, you'd say somewhere right around here, right around about 4,300-ish area. So if you get above there, then yes, that would be the time to take it. If we were making the assumption that this is even right to begin with, which it is not. Again, should I even talk about this kind of shit? Probably not, because it's just going to confuse. But again, for the people who are really dedicated, I think you guys understand that. I'm going to get rid of this alert right here. I don't really see the need for it. But we have a great example of kind of waiting for patterns to kind of confirm themselves before playing them. And this was last night. If you remember last night when I was on live stream, I was calling this a bear flag right here, and it is a bear flag. It's shaped like one. It has the right volume characteristics as one, and it was acting like one. But what happens over here? Well, it takes out the resistance trend line, not the support trend line, which is what typically happens. Statistically speaking, that's more likely to happen, but doesn't always happen, and that's completely fine. And then you boost all the way up on over here. Now we were lucky to catch this one live on stream yesterday. I think I traded it live as well. I think I was trading my main account, but also I had a stop market buy in on my streamer account right over here. Let's see. Let me just can I? Yeah, I'll bring it up right now. Just one sec. Whoops. I believe I showed this last night, but I can just show really quickly what was being done over here. Okay, there we go. All right, let's get this into visual view. Yeah, and then scroll down over here. And I believe, yeah, okay, there we go. So I got, no, those are still my sells. Where's my buys? Where's 30? Okay, there we go. Can we see this on screen? Oh, nope, you can't quite see that. Let me just scroll on a little bit more. Oh, can we see it now? Okay, yeah, cool. So it looks like, no, it's not even there. Oh, God damn it, man. All right, let's go to the next page. How do I do this? Is this, what? Why is there not another page? Oh, include old. Okay, there you go. All right, so, okay, there we go. There we go. So you see the market buy. Nope, you still can't see it. All right, just one second. I do think that it's important to verify yourself, so that's why I'm kind of going through this right now. Okay, so you see that that perps right there. You can't really see the buy on it, though, now can you? But you can see the perps over there, 72.09 market price. I basically market bought that as it broke out. It's 37.11 average price is what I executed at. So as soon as we broke above kind of this area right over here, I wanted to get long. Now, if I were trading this, I was trading my main account live at that time. So if I were doing my streamer account, I would have bought right over here. As soon as you bust above this guy right over here, that was the actual time to be buying. So I got this one late, but again, not a big deal because this one did have some legs to it. So not a huge deal. Then I got rid of some coins at 38.50, then some at 39 something rather, and now I'm back to basically being actually a little bit short on my overall position, because remember, I am, I still have this short from 6,300 right over here. So that's what I'll be managing going forwards right now. And let's see. Okay, so back now over here. All right. Yeah. Okay. What? All right, great. Okay, cool. Just making sure that's all good. But yeah. There you go. So again, when it comes down to it, I am looking to get back to neutral. I don't want to be short right now. It's not good trading, although I am, overall bearish. Bitcoin can very easily, if it takes out this resistance right here, 39.60, make another stab at this that's 40.80 area right over here. And I don't want to sit through that, almost $200 of lost profit. I'm not interested in sitting through that. So again, this is trading. Then this is also another thing that kind of gets me sometimes. It's like people will say, but you're bearish. Why are you long? It's like, because I'm a trader. I mean, I'm not bullish or bearish, man. I'm a fucking trader is what it comes down to. But overall, keep in mind this guy right over here. Keep in mind this guy. While we don't necessarily have an inverted head and shoulders, we do have something that I actually put a lot more weight on. It is also a bullish pattern. We got this guy right over here, a descending broadening wedge. And the upper resistance of this guy is coming in where? Right around about 4,000-ish area. So if Bitcoin does break above that area, that's actually going to generate some interest from my side. And I would imagine at that point, there's not too much stopping you from the green 55 exponential right over here, 43.20-ish area. So again, that would be the next kind of long trade if I were looking for long trades above that area. I think the first pass on the green 55 would be a very nice short and probably a very good short overall. You'd still be creating lower highs below this guy right over here. So to me, that is very important. And overall, just by the more traditional sense, I mean, in the most easy senses, this is all lower highs and lower lows for the past, over a year now, well over a year and a couple of weeks. So that's way more than a year. But you get my point. Bitcoin's trend has not changed in quite literally over a year. So the trend is your friend until the end of the trend. And that's essentially what it comes down to. What I am looking at right now is I'm kind of looking at this area similarly to how we acted at 6,000, where Bitcoin kind of created a support floor right over there. And also something analogous to what we did right over here in 2014. If you want to make a nice relation between these two, again, market cycles are not always identical. They're not identical twins, but they are like brothers. They share characteristics because, again, it's psychology behind this going into this that makes them have these sorts of similarities. When it comes down to it, market cycles, technical analysis, just trading in general, we're always going to be dealing with human irrationality, human exuberant irrationality, I should say, human fear, human greed, human fear of missing out, also a great term as well, human despair, human doubt, all these sorts of things which do drive market cycles. And so you can get these very similar, setups that you get over time in relation to an asset and even across assets as well. Like you see the same sort of market cycles across assets, again, because we're dealing with humans. Now, the kind of variances between those, yes, there's certainly some, but the overall shape, the overall feeling of it, and the overall cyclical, emotional description of it is very fucking similar. And I can say that from experience. But again, right on over here, you have very similar volume characteristics of what you did, on the stab down to what you did right over here at 3,100. Everyone thinks that this is the low. You've already had a pretty hefty downtrend already, going from, if we do dildo body to dildo body, it's going to be about 60%. But if we do wick to wick, let's do wick to wick, as that might get this one a little bit better. Yeah, you can see very, very clearly it boosted up a lot, 76% right over there. So again, everyone thinks this is low. It's already gone low enough. You can't go any fucking lower. So better get long, bitches, and you better be really obnoxious about it on Twitter and just call anyone who doesn't agree with you a fucking moron, which is always a really good thing to do when you're explaining high level concepts that are not necessarily black or white, like trading. But anyways, right on over here, Bitcoin kind of reminiscent of that. Again, the volume very, very similar, and really, when it comes down to capitulation, I'm looking for something like this compared to what you did over here in the parabolic market cycle. So in our parabolic market cycle, we did something like this right over here, which is head and shoulders above this guy right over here. Bad term to be using right now, just to be even more confusing. But my point is that, when Bitcoin is double the price in this area right over here, like the volume being higher than this guy right over here is literally going to be more than double as well, right? Because it's measured in coins traded, not dollars traded. So if you were to look at this in dollars traded, this would be severely less than what you did right over here. And essentially, when Bitcoin actually does have a capitulation move, I'm looking for something analogous to this right here, just like your capitulation over here was kind of analogous to this guy right over here. That's what I'm looking for. We'll get into a deeper discussion about that a little bit later, but I still want to round off the lower time frame. So So here's the thing. When it comes down to Bitcoin, and this goes for any market again as well, it's a game of liquidity, right? It's a game of liquidity because there's big players in this market that actually move the markets. I call them market movers. People wrongly refer to them as market makers. I was a market maker myself. I guess I still kind of am. I still have my Series 56. I'm a market maker authorized trader. I used to trade on the floor of New York Stock Exchange ARCA. And those terms are not interchangeable. Market mover and market maker. Market movers are just people with a shit ton of money. Yes, market makers can have a shit ton of money as well. Sometimes they can be market movers, but market movers, are people with 500 million plus to a billion. Those people can't just enter in at market or exit at market at will, because if they put in a even like a $10 million order on BitMexico, then you're going to move the markets like $20 to $50 on just 10 million. Imagine what you're going to do with 100 million. You're going to move it hundreds of dollars, which is literally $300 now is like 10%, or $400 like 10% move now. That's fucking crazy, man. That's absolutely fucking crazy. So again, when these people are trying to get on and get off the train, the proverbial train, well, they need to actually engineer liquidity for themselves. How do you do that? Well, you make everyone think that the bottom's in is the way that you do that. You paint an inverted head and shoulders, and then you maybe even break it out a little bit. You've certainly seen this before, also known as false breakout, and then sell right on into it. Because now you have buyers for your bags, for your liquidity, or sorry, you have people like interested in buying your liquidity because they think that the bottom's in. That's why I'm always very skeptical of patterns. I'm not really a pattern trader myself. I will trade patterns, but I don't go out of my way to look at it. I like triangles. I like triangles. Triangles are good. I like eggs. I actually really do like eggs. But symmetrical triangles, ascending triangles, and descending triangles actually do play out pretty damn well. Inverted head and shoulders, cup and handles, all that other good stuff. Flags are like decent. They play out more often than they don't. But again, they are, because everyone can kind of look at them and see the same thing, and like everyone's pretty aware of them, it does do a really good job of generating the interest that the bigger accounts need to generate in order to offload big amounts of coin. So keep that in mind right over there. Just making sure that I'm recording. Okay, good, because I've recorded like hour-long videos in the past, and I'm like, oh, I'm not recording. Oh, my mic's off. Oh, there's nothing on my screen. Fucking great. Anyways, so it looks all good to me. Okay, so that's kind of what I'm thinking right over here, but I will respect the 10 simple moving average as long as we're above it. I don't really want to be like short until we're back below it. The cross over here, the 10 simple to the upside of the yellow 21 typically is a good signal as well. Although the first signal after a long downtrend or after a long counter trend is usually not a good one. So I do want to say that, but you are getting one right here. Fair enough. So this is what makes it difficult right here. It's like an obvious fucking downtrend, but you're gonna have your ups and your downs. So you gotta be careful with where you're getting in around. You got the 100 exponential on the 12-hour coming in right around 41.50. That's also gonna be an area of interest if this thing does take another leg up. So keep that one in mind. I am looking at the volume on this rally overall, and this is very corrective volume. So I think that this is, I am looking for a place to get short. The question is, where is the best place to be getting short? Because this very easily could make another stab at 41.50. So again, keep in mind all these things do come into confluence with each other. But how high can it go? I mean, I think at maximum area, things could get to about 45.50, 4600. But the big thing for me is really coming down to the 200 exponential right over here. The 200 exponential, this purple line on the weekly dildo time frame. As long as we're both opening and closing dildos below there, heavy pressure down. And yes, I'm pretty damn bearish when looking from that. I mean, there's three things that I'm essentially looking for to denote, like, the bear market being over. First things first, I want to see an uptrend on the daily. That's not going to do too much, but it's a good start. We haven't had one in literally over a year, so that would be a good place. Start small. The second one is this one that I just talked about, a weekly dildo both opening and closing, not just closing, but opening and closing above this purple 200 exponential moving average right over here. So it won't be able to do that this week. It might if it closes above this area this week, which I don't think is actually that likely either. then I suppose then next week might have a chance. But as long as we're both closing, as long as we're closing them below right now, again, don't really care. You could get a wick above. We've gotten wicks above this area right over here, but they, probably going to be rejection. And then the third and final and the most important piece, although you could probably figure it out before then, would be a daily dildo closing above the breakdown point of 6,000 right over here. The area that we essentially spent almost a year going sideways upon. So that is your consolidation. That is your breakdown point. If you can get back above that area, that would in my mind healthily denote that it's time to be looking for long-term longs. Because again, I am long-term bullish on this asset. I do believe that it can get some of those crazier numbers, but in the more immediate terms, I'm in no sense a fucking moon boy. So let's actually put on the 200 simple moving average right over here, because our exponential, or sorry, the 10 is not going to tell us too much on the weekly. But overall, to me, this is just a reaction off the 200 simple right over here. That's kind of all. After a pretty hefty downtrend, volume again on this is not good enough. If we're talking about capitulation, I'm looking for 3 major things, but we can talk about 4 or 5 things overall that I'm looking for. The first things first, volume needs to be analogous to what you did, as we spoke about earlier, on your actual parabolic market cycle. If we look at this in dollars traded, you're going to see extremely fast that this is not fucking good, man. This is nowhere near what you need to be. Going back now over here, yeah, there we go. Let's bring it up. We can actually look at it on dollar valuation right over here. There you go. You can see very, very clearly. Nowhere near, man. Nowhere near. In fact, if we take this the right way, it'd be about 86% less volume measured in dollars, not coins traded, which is the more accurate way to be measuring it. Also, I'm looking for an actual, I'm looking for a relatively quick bounce. When you do put in major market lows, you spend about an hour, you spend about less than an hour is what I can say at your actual low, and then you like within about 5% of your low, and then nowhere near afterwards. And right over here, you can see we spent about 1, 2, 3, 4 days at the actual low. So that's too much. That's too damn much. Right over here. Sorry, let's go to like a 4-hour right over here. Let's go to 6,000. 6,000 is a good example of potential capitulation. I mean, this is what capitulation does look like. It didn't give you the market cycle low, but this is what capitulation does look like. So anyone who's been in this market for over a year does know what it looks like. This right over here, I mean, look at this. In your first 4-hour dildo, you were already 10% off the lows. By the end of the day, you were 40% off the lows. I mean, that's really fucking good. And it didn't give you much time. You also had a great example right over here on your stab down to, from 20,000 to 10,000. This was also another example. This does work. It wasn't your market cycle low, but this is what capitulation would look like. On that first 4-hour dildo, you literally went up 25%. That's more than our current bounce right now. And we can actually measure this one out when we come to our second point. But by end of day, another 40% up. And if we went to 2014, it'd be about the same. I'll do that tomorrow in the long-term analysis video, but I don't want to do everything right now. But basically, on the bounce as it stands, Bitcoin has rallied off the lows about 22.5%, and this is literally in the span of 2 weeks now, like almost 2 weeks. As of tomorrow at 7 p.m. Eastern time, it will be officially 2 weeks. So compare that with less than a day and more of a bounce to 2 weeks. So those are the 3 things that I'm looking for. The percentage bounce doesn't need to be exactly 40% in one day. That's not that important. It needs to be something similar to that. And also the speed of it coming off the lows is very important as well. When a big market, mover comes into the market and says, you know what, this is good enough for me, I'm putting it on the floor. That's it. You don't get a fucking second chance, man. You might get within 10%, but it's not that generous. It's not that generous. And when big boys do come into the market, you're gonna fucking know. You're gonna fucking know, because this thing's gonna rally like you haven't seen for a year. Anyways, again, this is a very corrective move. It's what it looks like to me. But corrective moves can still rally. You're gonna have your rallies and your downtrends. And like I said, we're gonna be stuck in the mud right over here. So to me, what's probably likely to happen, also, I think that I think this is pretty damn likely as well. Sorry, oh, we already have it drawn in there. If we do pop up to this area right over here, 4,000-ish, essentially, and put in another lower high, well, you're just gonna be making another, more lower highs. And I do believe that the 32 to 3,300 level is gonna become like mud. It's gonna become like mud somewhere right around here. And what are we gonna create? If you just go across this area right over here. Another descending triangle, kind of similar to what you did at 6,000, something like that, as long as you're respecting that area right over there. So that's actually a critical point now, the 4,000 area. And Bitcoin does like descending triangles. It's like it likes descending triangles as well. It's just like triangles in general, symmetrical triangles, indeed too, which I do as well. But hey, there you go. So again, these are things to be watchful of right here. CME gap, keep in mind, is 4,000 as well. Now we did get the spike up into this range right over here. Yes, this does count as a gap fill. This is not like the most. This is not like the most, what's the word that I'm looking for? Like the most obvious one, I guess is the right word. It's not the most obvious one, or it's not the most confidence inducing one. So usually when I'm playing gaps, I want to see it like filled all the way to the dildo body. It doesn't need to be, but I like to see that just because it makes me more confident that that's the right time to be taking a play. This one got a wick over here before selling down, and this was a quick sell down. Don't get me wrong. This does count. But that area is coming around, dangerously close to the 4,000 area as well. So coming in around that upper resistance that we were just looking at. So again, all these things do kind of come into confluence with each other, and I do like this for a trade. Is right now the right time to be taking a trade, or do we get another try around the 4,000 area officially? I think that's actually a little bit likely, although I don't have a strong opinion here. Like I said, I don't really have even a position here in the way that I really look at things. And also keep in mind, CME's closed yesterday at 38.45. So wherever price action is on Sunday before these things open at 6 p.m. Eastern Standard Time, well, that's going to be the next big play in my opinion. I don't like playing things over the weekend. I don't want to have positions over the weekend. I want to essentially be waiting for CMEs to open back up, because yes, I do believe that they actually do run the market, and the charts over here are a lot easier to read actually compared to spot exchanges. Weekend action is just not. It's usually just gonna fucking frustrate you, or at least it frustrates me. So I don't really trade it. But that's kind of what I'm looking at right over here. And yes, I do get fucking frustrated. I'm not a perfect trader or anything like that. And I always want to make sure that that I talk about that, because in my programs, like as a professional trader, you're gonna take losses, or at least I don't know anyone who doesn't take losses, and myself included. The key point is to be taking losses that are relatively small in comparison to your gains. Because we can actually make expected values based off that, and essentially even go with like a worst case scenario and still make money. That's the idea. Now, of course, with our technical indicators, with our skills, with your experience, you're gonna likely boost that up a lot more. But even if we take like a worst case scenario, you're still gonna be taking losses, but they should be less, and you should be theoretically in profit. That's the key. That's the goal. So I always want to mention that, because I don't feel like I mentioned that enough. Although although recently been all right. Okay, so back now over here to BitMexico, and the range for this weekend is going to be pretty damn clear in my opinion. 38.80ish area. This kind of block right here that we broke out of, and looks like it's flipped to support. Let's actually put a nice blue box in there. Let's actually put this blue box right over there. So yep, it was kind of resistance on this consolidation right over here, and then we broke it out over here. We've been using it as support, so it's been flipped from resistance to support. Typically a good thing. Do we rally off of it, give it another try to this 39.69 area? Yeah, I mean, it's certainly not another question. Again, I'm not necessarily looking for longs, but also keep in mind that your descending daily resistance trend line is going to be coming in a little bit under 4,000. That's going to be big. CME gap is going to be fully filled at 4,000 as well. So again, if it does rally up into there, I think that's a trade that I'll be a little bit more comfortable with taking. Yes, I did take this one right over here, but not really liking the way that it's acting right now. And during the weekend, it's just more stress than it's really worth. Is what it comes down to. Let's go to the 4 hour over here. Let's see what our oscillators say. Oh, yeah. Also, we have the 200 exponential coming in right around that area as well. So a lot of things really lining up around this area. Do have to exercise extreme caution. Doesn't mean that I can't break out above that area, but if it does break out above that area, we probably will be seeing 42, 4,300, something like that over the next week. Again, if major fucking if I don't have a strong opinion. I don't have a strong opinion either way. Also, the 236 Fibonacci retracement coming in around that area as well. So again, another good thing coming around that area. Again, if you were buying the 618 down around here, like an algo, you're probably gonna be programmed to sell the 382 and then the 236. So again, just random things to be aware of. But the 200 exponential in the 4-hour dildo time frame, which did give price action a lot of harassing right over here, probably going to come into play as well. So I would put a lot of weight on this. So yeah, that's kind of what you're dealing with on the upside. Again, if you do break above this area, then probably do crawl your way back up to 40, let's say 42, probably his prior high right over here. I don't think it's certainly out of the question. And then you're gonna have all the inverted head and shoulders players, screaming at the top of their lungs. I mean, maybe you do get that run to 45, 4600. But again, I'm not really looking for it myself. And the key factors are what I spoke about earlier. The three big things that I'm looking for. I'm looking for daily dildo uptrend. That'd be great. That doesn't necessarily do it for me. Then obviously weekly, both opening and closing above the 200 exponential, and then we have the 6,000 area being taken out. Now, of course, I could get that, or we could get something that is just more obviously capitulation, which we talked about earlier. I forgot to round out that discussion about capitulation. But we talked about the three things. We talked about the time spent at the low. We talked about the percentage off the low, and we talked about the volume. There's also one thing that's kind of divorced from that. That's the MVT signal right over here. The MVT signal, which is called every market cycle top and every market cycle bottom perfectly in Bitcoin's history. That is currently off the area where it typically does bottom in around, which is where my cursor currently is right now, right around this. No, it should be the 0.5 area. Yeah, right over here. So we still have some room to go down. It doesn't have to get all the way down here, by the way. It has to. It's like right around here is where I'm looking for where my cursor currently is. So again, that would look good to me. Also, the other thing that I'm looking for, and I'll go through this in much more detail tomorrow. I'm looking for the historical volatility rank. I won't go through it right now just because there's too much. There's just too much fucking tune on the screen right now. But overall, yeah, I am looking for a lower low. This is going to happen. I should not say this is going to happen. It's a wrong terminology to be using. But if this is going to happen, it's likely to happen like late January, early February, something like that. Maybe, or again, time analysis is not something that I'm too comfortable with. But somewhere right around here, 23 to 2600 is my next area of potential reversal. Underneath that area, we do have 1800, and then underneath that area, the 1100 to 1300. Now I see so many people talking about 1500 to like 1100 now that I don't think that that's likely. Either one of two things is going to happen. It's going to get front ran, and I don't see anyone talking about fucking 1800 right over here, which I think could be it. It's not the most obvious area, but it does work, especially if we put on the volume profile. It actually doesn't really show too much in there, interestingly enough. But again, it doesn't, it's when you talk about capitulation lows, it's just about a big account coming in and putting in a floor. That's what matters, not necessarily like historical things like this. They do count, and people will be considering this, but they all, big market movers also know that everyone's looking at the same thing as well. So knife catchers beware. Knife catchers beware. Anyways, when everyone's looking at the same thing, you either get one of two things: gets front ran, or you go below and then spike back up and get one of those nasty wicks, and that might take you down to like below 1,000 if that were to happen. Again, I don't have a strong opinion on where that actually happens. Again, I take it one thing at a time. I'm never going to say it's definitely going here no matter what. There's no questions about that. All I can say is you got a potential area right over here, the 886 Fibonacci retracement, which is actually where you did bottom out in 2014, just saying. And some good high volume nodes coming around this area, so I do like that. If we can get this, come on, babe, come on, you've almost said the bad word, the one that everyone doesn't like. But your volume profile showing some nice activity in this range as well, and also some good historical China banning Bitcoin bullshit right over here, I believe, something like that, and good horizontal trend lines that I like as well. So overall, I do like that area. It's certainly a potential area. If that area does fail, then yep, those are the next two areas underneath that. But again, it's not, we can spend a lot of time going sideways, or not going sideways, but essentially, rallying off the low 3000s and then putting in lower highs, below the weekly 200 exponential right over here. It can take 2 months. It could take a half year. I don't think it's going to take a year. I don't think it's going to take a half year. I think it's going to take a couple months probably, if you're asking my opinion. But again, there's no way to fucking fucking know that, man. There's no way to know that. But it's this next trade won't be really, to be made until you take out essentially your 200 simple moving average on the weekly. It doesn't need to be any more complicated than that. That's currently coming in around 3,200 and rising over time slightly. If you do want to nail it down just a little bit more, we can, but it's going to be less accurate. But we can go down all the way over here, and yeah, I'd be saying if you take out 3350, that's not a death sentence. But if you take out 3250, that's pretty fucking bad. But yeah, a weekly dodo closing below the 200 simple, that would be enough for me. Okay, so we covered that. What else do we want to talk about? Okay, I think we got Bitcoin. Let's talk about the more the potential bearish resolution of what's going on over here. Remember, CME is closed at 38.45, so they closed all the way right around here on Friday. So that will be like a magnet when they open back up on Sunday. So depending upon where we open up around, if we open up above on spot exchanges, then it's probably going to be a buy on the first pass on the actual gap fill. If we open up below, it's going to be probably a very good fucking sell. But hey, if Bitcoin does break this 38.40 area right over here, or I guess you could even say 38.69 right over here and close like an hourly dodo below there. Although again, weekend action, it's like almost not even worth fucking talking about. If you do break this area essentially, then yeah, I don't really see too much holding you up from this area right over here at around 37.50ish area. Then below there, you're gonna have the same supports to deal with essentially. You got this guy right over here at the 0.5, or you could even say the 0.5 is going to be more important at 3,700 even. Then obviously you got the 618, which is what we rallied off of prior. Probably going to bounce a little bit, but that would likely to fail if we did take out this area. And then you probably make your way back down to these lower areas. It's going to take some time though, and I do believe that Bitcoin does return back down here, but it's going to take that X factor of time. So I think that kind of trips a lot of people up as well. Understand that some of the ideas I might be talking about here, it's not going to happen today. It's probably not going to happen today. I can't really say that, but it's probably not going to happen today. It's not going to happen today. Bitcoin's not going to go to 3,200 today. It probably goes back to 3,200, sometime in the next couple months. But again, it's going to take some time. Let's see where GBTC closed. GBTC closing out the day, yeah, down around here as well. GBTC did do kind of what I'm looking for Bitcoin to do overall, basically returning to its prior lows right over here. Again, a great leading indicator for Bitcoin. Has been a good leading indicator over the past year, and still, it'd still be kind of suggesting that. So it'd be suggesting that we do come back down to this, that muddy territory at like 3,300-ish area, rally off there, and basically just put in some more lower highs at the end of the day. I mean, that's really all it is. Closing the week out right above this horizontal right over here, which we can actually raise up just a little bit, $4.15 and such. So probably spend some time, maybe even rallies off here. Probably I wouldn't be surprised if this thing makes another run towards $4.50 over the next in January sometime. Okay, so we covered all of that. Let's go talk about Mr. Ripples, because people are gonna be mad if you don't talk about Mr. Ripples. Mr. Ripples, looking like everything else, looking literally like everything else right now. What do we have to say about this guy right over here? Yeah, it's a 3-day that I have my eyes on. The lower time frames are great, they're fine, but the 3-day is telling the story right here. You have the 3-day dildo death cross right over here. You're still being shuffled back below the yellow 20-minute exponential. Huge wick on this dildo right over here. We will be closing this 3-day dildo later tonight at 7 p.m. Eastern time. Yes, you do kind of have a hammer, but very light volume. To me, this is likely to lead to some more, maybe even test the yellow 20-minute exponential again. In fact, it actually kind of looks like you will, but as long as you're below that, the direction is down, and the direction down leading the path somewhere back around this 27-cent region right over here. This is just another lower high. So that's really all it comes down to. I mean, again, it doesn't need to be any more complicated than that. Let's go check out Mr. Buterol. What's he doing? Where are you, Mr. Buterol? Yep, there you are. 142, it looks like. Yeah, 142. And same thing on Mr. Buterol. Death cross, 3-day dildo death cross right over here. Closing the 3-day dildo below the yellow 20-minute exponential, below all these horizontal resistances right over here as well. Getting rejected from the 0.5, it looks like so far. Again, we'll be closing this one later tonight. Does it reclaim the 21? I mean, it's possible. It's possible, just like Ripples. It's possible. But I would say that after rejection like this on extremely heavy volume, it's probably unlikely. But again, you have some weekend bullshit right now, so you never know. But assuming that it does not, again, still direction would be down, probably comes back down, tests, 110-ish area over some point in time, sometime next month, or sometime next month in January, I'd imagine. So yeah, as long as you're below 143, there's not too much to be looking at over here. As long as you're below 143, I don't really like what I see. To me, this just looks, this spike just looks like a retest of this guy right over here. We spoke about that on live stream, off by a couple dollars, but again, it doesn't fucking matter. Not really, man. Don't have to be perfect to make money. Just a retest of the 618 and then down. So again, as long as you're respecting this area right over here, 140, or is it 143 or 144? It's let's call it 144. Yeah, 144. As long as you're closing dailies below 144, not too excited about this guy either. If you do close it above 144 though, don't see too much stopping you from like 173. So there you go. Can see both ways. But yeah, higher time frames matter most here. Again, I know people are trading like the 5 minutes, so it's like, that's like trade at your own fucking risk. You're right at resistance on a 4 hour right over here. That's 143.5. So again, just keep your eyes on that. You did just get the golden cross on the 4 hour dildo time frame. That actually does typically hold a lot of weight. So fair enough, but it is the first cross after a very long downtrend. Last time you were golden crossed in the 4 hour was like, okay, we're getting pretty far back now. Yeah, over here in April. Good one, Mr. Buterol. So yeah, there you go. Anyways, I guess we get back on. Oh, let's go check out traditional markets. Again, I'll be going into this in depth tomorrow during the long-term analysis video. But this is like you almost get like a second chance to play Bitcoin over the last couple of weeks, because it's the same thing over here. We were bearish on this guy. You put in a bull trap right over here, reject from the yellow 21. Daily gave you a daily dollar death cross right over here. It was time to take a trade. I mean, this was very obviously a bull trap, but traditionally speaking, the time to take a trade was on this rejection of the 21. After that, it happened very fucking fast. But not only that, you met the measure move of this head and shoulders reversal pattern. Everything looked about right, and then you come down to your 200 simple moving average. While I am overall bearish on this thing, just like Bitcoin, I don't want to be short coming off of the 200 simple moving average. That's the time to be closing shorts. A lot of people were asking me, should I, SPY looks like shit, should I be shorting over here? Fuck no, man. Or at least I would not be. Again, this is not financial advice. I'm not a financial advisor. Just sharing exactly what I would do in this exact sort of same situation. So again, that's kind of what I'm looking at right over here. I think that over, in January, when we do get the next monthly, you're probably going to spend like, some part of January crawling your way back up somewhere around the yellow 20 minutes exponential, somewhere right around 260, something like that. It's probably going to be, some up to start off the new year. And then after that, whether it's late January or February, probably the sellers take back over again. If this thing is going to go lower, which I do think that it does. Again, looking at this guy right over here, major bearish divergence on your monthly RSI, you will likely be getting into your bearish control zone for the first time since 2008, 2009, right over here. And the time prior to that was actually the dot-com boom or the dot-com bubble of early 2000s. Also, monthly Stokes over here, bearish divergence, rejecting the more critical zone, and then down. Again, I'm looking at this guy, and also the Jewel giving you a beautiful sell on this guy right over here. Fucking yes, man. Love that. Absolutely love that. And DMI giving you actually a fresh sell signal as well, as of probably on this next tick. So again, probably gonna rally back up a little bit, but overall, I do believe that this thing is going to be coming down sometime next year. Again, lower lows next year, probably around this area, 210 to 220-ish area. Let's see. Yeah, I have some nice supports coming in right around this area, and this ledge right over here between 210 and about 220-ish area. So yeah. Speaking of monthlies, Bitcoin will be having a new monthly as well. And as of the current moment in time, it is actually putting in a hammer on the monthly. So that is interesting. Does Bitcoin close as a hammer? Does it close? And more importantly to me, does it close above the monthly 55 exponential moving average right over here, the green moving average at 3,700? That's a good fucking question, man. A lot can happen between now and 2 days before the end of the year. So keep your eyes on that. Definitely keep your eyes on that. If Bitcoin does close above the 55, we're probably going to spend a lot more time going sideways. It would be what I have to say about that. So Yeah, keep your eyes on that because that's gonna come into play, in the next few days. We will be getting resolution on that. Anyways, I'm gonna go back on over here to good old Bit Mexico and go back to the lower time frames and close this bitch out. And essentially, it's this simple right now. You got support right here. This kind of support box right over here, going from, let's just call it 3850. As long as you're above 3850, you probably get another try at this 30, 39, 60, 69 area right over here. If that area gets taken out, don't really see too much stopping you actually from about 4080-ish area, maybe 4150. Maybe even get another test of your prior high. The up moves in a downtrend are very difficult, very fucking difficult. That's why I don't like taking longs. But you will be getting a golden cross on the hourly pretty damn soon. But hey, if you do take out 3850 and crawl back down, which remember the CMEs did close, they did close 3850. Then support probably somewhere right around here, I'd imagine, right around 3770, something like that. Let's see what the volume profile says. Actually, I'm curious. Yeah. So he has it right around here, around 3750. Yeah, 3750. So I'd agree with that. If that area gets taken out, then probably do take a stab back to this 3600 low right over here. Probably bounce off there and then probably work your way lower and finally make your descent to this to your prior lows right around the the low 3000s. So that's kind of what I'm thinking right over here. Again, that's going to do it for today. Weekend action typically doesn't break ranges, but I mean, that's not every fucking time. Just more often than not, it doesn't. So that's kind of one thing right now. Don't really have too many. I mean, I technically have a trade on myself right now, but I'm going to be getting back to neutral, on the next opportunity. So that's what I'm thinking right now. Hope everyone finds this video well. Hope everyone's doing well. Hope everyone's got everything that they wanted for New Year's Eve, because you need to pre-plan for it. And I'll be back on tomorrow with another video update for some long-term analysis. All right, take care, and I'll see you guys soon.